Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, March the 2nd, 2010. Well, another long shadow on the top of a relatively small body for this candle today. And once again, this market is showing just how strong the resistance between the 81 and 81.4 region is. It also highlights the strength in the support at the 80.4 region when the market is trading within this boundary. Now, previously we had this large congestion area and a breakout with a very negative breakout, and now the market's congesting again. So this is certainly looking like a market that doesn't want to go on with the trade to the upside. Having said that, though, it's also a market that doesn't want to trade to the downside, so the market's finding a lot of support. Looking at the past 4 candles, every time that this market has attempted to trade up above the 81 level, there's been strong downside price rejection, and the bears have come in force and shown strong commitment to taking this market lower. Unfortunately for the bears, they've failed to close the market down below the 80.4 region as well. So even though the market is looking bearish in the short term, the market will need to trade down below that area. That is a very significant area of support, a previous area of resistance. But if we look at this 81 region, the market has tested it on 1, 2, 3, 4, 5, 6, 7 occasions, and it's failed to close up above that area, and the sellers have come in each time and substantially traded the market off. If the market does close up above that area, and especially the 81.4 region, then that will add weight to the fact that the market is extremely bullish. The more times that an area is tested, the stronger that it is. So this area between 81 and 81.4 is very strong resistance. But when that area is broken, it's quite dramatic. Whenever any very strong area of support or resistance is broken, it is a very, very significant move, and a factor that may add more weight to a breakout as such would be, in this case, a very bullish close up above that area. Now, I don't want to preempt what may happen in this market, so I'm just looking at scenarios that can happen. If that does happen, then we do need to be ready. To the downside, though, by the same token, if the 80.4 region is taken out with a solid bearish close, then there is potential for the market to trade to the 80 region, which is a round number, and then certainly to the Kijun Sen, which is at 79.68.5. Now, the Kijun Sen has turned flat, so there is potential for the market to retrace back to there. Quite often when the Kijun turns flat, the price action tends to be attracted back towards it, so we do need to be aware of that. This roughly coincides with the previous area of resistance and support around the 79.5 region, so potential for an area to offer support there, and also down to the 78.94 region, which is a previous area of resistance. Failing that, we have support all the way down to the cloud or the Kumo, but just looking at the cloud, the market is still trading a long way up above the cloud, which means that the market has an overall positive bias. The market is trading up above the Kijun Sen, which means that it's bullish in the medium-term time frame, and the market has turned slightly negative in the short-term time frame with the market trading down below the Tenkan Sen. It's only just turned down below it. The Tenkan Sen is, however, pointing up fairly sharply, and that's reflecting the upside momentum that the market has in the short-term time frame. So once again, we do need to be patient, wait for this market to develop, and it will eventually develop. Either with a breakout to the upside above the 81.4 region, or a breakout to the downside below the 80.4.